All right, I found a GIC that pays 15% interest per year. GIC being guaranteed investment certificate. So your capital is secure, your interest is guaranteed. So it's sort of the safest investment you can make because there's no risk to losing your capital. But obviously there's no capital appreciation. There's a fixed amount of interest that you're receiving. You know it beforehand, and once the term is finished, you get your capital plus the interest, of course. And usually during the term of the certificate, you cannot break the certificate or withdraw the money. Or if you do break the certificate, you're going to pay penalties. So if we look at GICs on ratehub.ca, link will be provided below. So if you go under investing, pick your location, compare all rates, investment amount 5,000, term is 1 year, provider all providers, how to buy no preference. So these are the best providers in Canada right now. So People's Trust 2.95% for 1 year, 2.75 from Alterna Bank, Oaken Financial 3.1, CIBC 2.5, Accelerate Financial 3%. So it's a little bit more than a savings account at Tangerine, for example. Let's try 2 years, or let's try 5 years. So if you buy a GIC, a guaranteed investment certificate, for 5 years, so it's your money's locked for 5 years, you can't touch it. You'll get paid with Oaken Financial, you'll get 3.6% every year. Click on details. It's not compounded, so the interest that they give you does not allow you to collect interest on interest. So basically they'll just give you the 3.6%. It's paid annually. You could use that 3.6% to buy more certificates, but maybe by the time you collect the interest, the 3.6% rate will not be available. But if you want it to be compounded, then you would have to take the interest and buy more GICs at the same rate. Minimum investment is 1,000. So for 5 years, you can see that Oaken Financial gives 3.6%. So some stocks pay dividends of 4% or 5%, but at least with stocks, you get capital appreciation. So your investment of $5,000 can grow to $10,000 maybe in 3 or 4 years. Plus you're getting dividends or interest of 4% per year. But with a GIC, your capital is secured. There's no risk of losing your capital. So if we look at 2 years, the highest is 3.3. So it looks like 5 years gives you the best return. 3 years, you've got 3.35, the highest. 4 years, you got 3.4. 5 years, we got 3.6. Let's look at 6 years. 6 years is weak. So you'd think that the longer the term, you'd get a better rate, but it doesn't look like it. Let's look for 10 years. 10 years, the best you have is 2.2 from Bank of Montreal. All right, so it looks like really the best term is 5 years. You get 3.6% every year. But like I said in the title of this video, I found a GIC that pays 15%. So now I'm sure everyone's wondering, where can you find a GIC that pays 15%? It's unheard of. Very simple, actually. Outside Canada. So there are many countries that offer GICs of much higher interest rate than in Canada, because their borrowing rate is also higher. So for example, National Bank of Egypt has GICs or certificates that pay 15% interest rate per year, and your capital is secured. So let's look at the certificates. It does come with a few downsides, and I'll explain. So let's look at the interest rate. So first thing to know is that it's in local currency. That means if you have Canadian or US dollars, you have to convert it to the Egyptian pound. So if you convert your money to Egyptian pound, first of all, as a foreigner, you can open an account in Egypt as long as you have your ID and obviously proof of funds or proof of source of funds. You can't just go there with your money and just open a bank account and deposit it and invest it. You have to show proof where the money came from. All right, so here you can see the different GICs that they have, all secured by the Central Bank of Egypt. And you can see here, for example, monthly platinum certificate. This is a GIC for a year and a half, and it pays 15% per year, and the interest is paid monthly. So for example, if you had $50,000 to invest, you'd be getting about $7,500 per year, but you're getting paid monthly. So you'd be getting $625 per month on this certificate. Your money's locked obviously for a year or a year and a half, but you'd be getting 15% per year. You have this certificate here, 15.75% per year. It's a 12-month certificate. Not sure if it's Not sure when it's paid out exactly, it doesn't say. You've got some variable GICs. So this one is 17%, but basically it's like prime rate plus a certain fixed amount. So depending on prime rate, this 17% varies. So you can actually get 17% if you wanted to go variable. If you've got platinum certificate with quarterly return, I think this one's a year and a half, you get 15.25%. So even more than 15%, and you get your interest paid every 3 quarters. Now this is National Bank of Egypt. This is the biggest bank in Egypt. So if you didn't want to convert your money to Egyptian pounds, you could actually keep it in US or euros, and you'd get these rates here, 3%, up to 4% here, 5.75% here. If you buy a 7-year certificate for US dollars, you'd be able to get 5%, almost 6% per year. Here you've got Australian 6% for 5 years. So they have some decent rates if you don't want to convert to Egyptian pounds, because obviously there is a risk when you convert to Egyptian pounds is currency exchange. So right now, 1 Canadian dollar gives you 13.47. But 3 years ago, 5 years ago, so back in mid 2016, a dollar Canadian would give you 6.6. End of 2015, a dollar Canadian would give you 5.4 Egyptian pounds. Right now, a dollar Canadian is giving you 13.5 Egyptian pounds. Go back 10 years, in 2010, or even 2000, not sure what year this is, let's say 2009, 1 Canadian dollar would give you 4.5 Egyptian pounds. As you can see, the currency drops in value year after year. And you can see this crazy jump here in mid 2016. It went from almost 7 to 14 in 1 day. So that's the only issue. So if you had converted your money to Egyptian pounds, let's say in 2016, in 1 day you would have lost 50% of your whole portfolio, of your whole investment, because you're going to eventually convert back to Canadian 1 day and it's going to be worth 50% less. Yes, you'd probably be making 15% interest per year, but you would need 3 or 4 years to compensate for that 50% loss. Although right now that it's at 14 or 13.5, probably doesn't, you would think that it can't get any worse and that eventually it's going to recover and come back down. But if you look at the long term, it just keeps getting worse and worse. So if we compare it to the US dollar here on Yahoo Finance, it's the only chart I could find that goes further back. So you can see in 2001, $1 would get you $3.89 Egypt. 1 US dollar would give you 389 Egyptian pounds. That's back in 2001. But today, $1 gives you 17 Egyptian pounds. Imagine how much value you would have lost if you had invested or if you had converted your US dollars into Egyptian pounds back in 2001. Yes, you probably would be getting 10 or 15% per year return, but you lost 8 times the value, 5 times the value of your initial conversion. But you see, the highest here was 18.97 or 19.68, sorry. But right now it dropped to 17.65. So you could say there's a slight improvement, but over the long term, you could see that because of the currency exchange, your initial investment would lose value. So there are many banks in Egypt that give you this 15% interest on GIC. But Egypt is not the only country that does that. You've got Turkey as well. Yeah, so it looks like Turkey is paying out 22.5%. Let's go for 1 year. So with Turkey, you could get banks in Turkey, you can get 20% per year on a certificate deposit. But of course, you would have to convert your money to Turkish liras. And if we look at a chart of Canadian to Turkish lira, so 5 years, you could see that, so it has been losing value also since 2014. So it went from 1 Canadian would give you 2 Turkish liras to right now 1 Canadian gives you 4. So it's not as bad as the Egyptian pound. It's more stable. The worst it's been here was 5, but this was temporary when there was like some issue with the states. But yeah, so Turkey would probably be more stable than Egypt, because over a period of 5 years you would have lost half your money, as opposed to Egypt, it happened in 1 day. If you can go further back, let's do 10 years. So in 10 years, it was at 1.34. Now it's at let's say 4. So yeah, you'd be getting really good returns per year, but the value of your money, the value of your deposit decreases because you're eventually going to convert back to your original currency, and you're going to convert back less money than you started off with. So obviously, the longer you stay, the the compounding effect of the interest rate will probably compensate for the loss of the initial investment. Also, maybe if you plan on living in these countries and you don't want to convert back to Canadian, then these would be really great investments. A great way to retire with a small amount of capital, especially that these countries are not that expensive. For example, Egypt, you probably need around $800 to live very comfortably there. Canadian, $800 Canadian per month. So if you need to generate 800 Canadian per month, you would need to generate 9,600 Canadian per month. So you'd need a capital of 64,000. So with 64,000, you could retire comfortably in Egypt. Right now, Turkey is paying about 20% per year on their certificates. And I think you need about 2,500 Turkish liras per month to live comfortably there. So that's about 30,000 Turkish liras per year divided by the 20% that they're offering. You would need 150,000 Turkish liras, which is about 37,000 Canadian. So you would actually need less money, less capital to invest in Turkey if you want to retire there because of the 20% return that they're able to provide. So your capital is secured, but the only issue, of course, is the currency exchange. And of course, if the bank system in the country just collapses, it's highly unlikely, but these countries usually have more instability than North America. But in theory, your capital is secured by the central bank of the country. Also, I have a friend from Argentina that said the same thing. I think they have like even higher interest rate. I wasn't able to find the bank online, but my friend confirms that in Argentina you could get certificates of deposit about the payout 30% per year. But of course, you'd have the same issue with the currency. So right now, $1 Canadian gives you 28 Argentinian pesos. And if you look at a chart, so you could see how much value it's lost since. Let's go back 10 years. So an Argentinian peso used to be worth 35 cents Canadian back in 2009, and now it's worth 3.6 cents Canadian. So it basically lost 10 times its value in 10 years. So that's the issue with these countries. Yes, you are getting a high return on secured capital, but if you plan on converting back to Canadian, you're losing a big portion of your initial investment. So they're probably great to retire in because you don't need that much capital because of the high interest rate that they're paying. But of course, if they're able to pay this high interest, that means there's probably something wrong in the country or in the system. Inflation is also very high. So your money does lose value quickly because you can do less things with it year after year. But it's worth mentioning, worth considering getting 15% guaranteed. Getting 15% on a guaranteed investment certificate is definitely something worth mentioning. So yeah, that's all I wanted to share with you. So if you have any questions, leave them in the comment section below. Oh, one last thing forgot to mention, and of course in terms of taxes, if you're a resident of Canada, you're going to have to report your gains. And of course, because these countries don't have TFSAs or RSPs, 100% of the interest that you're going to be collecting is going to be taxable. So 100% of your returns will go straight to your income and will be taxed in the bracket, depending on the bracket that you're in. So yeah, if you're ignoring all that and you're still gonna be trading on the stock market in Canada, and you're gonna open an account with Questrade, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. Or if you want, you can get $50 in free trades by using the referral link also below. So it's your choice. Also check out the other referral links in the description below the video to help support the channel. Thanks for watching.